your work evangelizing for Bitcoin. You wrote a great essay for Bloomberg View last summer, why I invest in Bitcoin. But bring us up to speed on where you are now as an investor in Bitcoin, personally and via your affiliated funds.
I think across all of the vehicles that I control, we're approaching just a little under 100,000 coins. Mm-hmm. And I think we'll keep buying more. Personally, I sort of have this belief that everybody in the world should probably have at least 1% of their assets in Bitcoin, not any other altcoin, specifically Bitcoin. And I think that we're just at the beginning. And what happened yesterday, by the way, at the IRS, hugely important.
I was going to ask you about that. They ruled that they would classify it as property.
And by the way, for anyone who thinks like all of a sudden this is a bad thing, it's actually a really good thing. There has been tax policy that has been exploited by rich people for years that have allowed us to wash taxes on anything that we own. And now, because we can own Bitcoin, I think that people will figure out via smart contracts and via triple entry accounting a simple way to transfer and waterfall down those capabilities to the average everyday individual. So, you've heard of, or you may want to Google this person's name, but there's a really, really well-known billionaire by the name of John Malone. He's famous not only for consolidating the cable industry, everything else, Brad, you know him well, but he's also paid virtually no tax. And part of the structures that he set up is by treating things as property, being able to do property swaps, asset swaps, right? And being able to defer tax all the way down the line. So all of a sudden now, if Bitcoin is a property, all we need in the combination of a smart contract and some clever accounting, which we all know how to implement in software, you can now take that same mechanism and cascade it down to the individual person, even using a Satoshi for a transaction. So I think what happened yesterday is really important. It now creates a big window.
There was a worry, though, that it would create extra friction around having to calculate capital gains on every transaction.
But this is what I'm saying. I think that's because people who haven't had access to extremely sophisticated tax planning don't even know that asset swaps and all these other things exist. But if you know it and you understand the tax code, a couple of you will be able to go today and figure it out, implement it in software, and then make it available to everybody else. What you're going to see now is a mechanism to be able to transact effortlessly and efficiently. And the great thing is these two specific areas of Bitcoin, the protocol, which in my opinion are the two most interesting areas, smart contracts and triple entry accounting, will now get the level of investment that it probably deserves so that you start to see some really interesting businesses.
Okay, but I want to go back to the first question. So you're primarily seeing the investment opportunity as directly buying Bitcoins. Are you doing any investing in startups? Have you invested in any ASIC startups like Cointerra?
I had an opportunity to invest in a couple well-known ASIC companies, and my background is in EE. And when you sit there and listen to these pitches, the thing that was confusing to me is people didn't even know what the word tape out meant. And so they were trying to tell me that they were going to build a chip that did something, and I said, well, what's going to cost you to get to tape out on call it 20-something nanometer? And they didn't know. And I didn't want to spend $20 to $40 million to tape out a chip that could theoretically be obsolete by the time they actually got it out of a fab. And so, all the way along, I've been very specific that I think Bitcoin as a store of value just has immense more ability to appreciate than any company necessarily. That doesn't mean that investing in a company is specifically bad. It just means that if given the choice, and frankly, because of the way our funds are structured and, I have that flexibility, I chose to just invest in the Bitcoin. But I think if you had more traditional constraints and you're a more traditionally defined fund, it makes a lot of sense to invest in these companies because they will generate lots of value. They just may not generate as much value as the underlying currency itself, but that's okay.
Well, I want to jump off from that contrast with folks like Mark Andreessen and Chris Dixon at Andreessen Horowitz, who are very upfront about their investment in companies. And not so much, or they don't talk about their own holdings, or they say that they haven't really made the investment that you've made. Do you think they're underplaying that, or do you think they're sort of less optimistic in Bitcoin the asset?
No. I mean, I actually believe them, and I think they're doing a great job in the fact that they're going to invest. I think Mark said hundreds of millions more, $250 million more or something. That's awesome. Look, the reality is, social capital is not a venture fund. It is a vehicle. and it's a platform that we created to affect change. And it's an assembly of individuals, largely, and our capital, with me being the largest. And so we have a certain degree of flexibility in a way of viewing the world that doesn't necessarily have to map to a traditionally defined way of using capital. We don't raise from pension funds. We don't raise from university endowments. We don't raise.
So how does owning Bitcoin affect change?
I think it's progressing a set of financial changes that fundamentally empower a distributed class and disadvantages entrenched interests. And from that perspective, I think we should absolutely want that type of thing to win. And so when I specifically buy Bitcoin, what I'm thinking to myself is I'm using my own personal capital to hopefully prop up and support the emergence of something that would rip apart the existing financial system. And if it does, God bless it. And what will happen is individuals who are on the right side of history, on the right side of justice, will benefit. Individuals will be able to get access to capital easier. Individuals will be able to transact cheaper. Individuals will not get cheated. Simple example, you talk about, for example, like remittances being a big business. For those of us who are not white and not born here, who send money back to a third world country, you will know that there are thugs that stand outside these money depots and will basically charge you like a cover charge to get into the bloody place to get your cash. And so when I send $100 back to Sri Lanka, my uncle or my cousin may only get $70 because he has to give 5 or 10 just to get through the front door. That's bullshit, right? So there's all of these things that are just so good and will change constructively if we have a fundamentally distributed, secure currency. And it starts with property, and property plus smart contracts and triple entry accounting equal a currency. So we should stop getting caught up in all the semantics and celebrate the fact that the US government now acknowledges what it is that you all care about. Hugely important.
So yesterday, you believe, was a pivotal day, but it feels like a lot needs to happen to facilitate this revolution. I mean, my mom is not never mind my mom, I'm not buying Bitcoin, because fundamentally, I actually don't believe I can hold on to it securely, or am technologically savvy enough to protect the investment. So what needs to happen? How much innovation needs to occur to get to what we're talking about?
And I think there are a lot of really good people here that are doing that. Zappo is doing that, Barry Silbert's doing that, Coinbase is doing that, Circle is doing that. There's all these great people, really smart technologists who are going to go and solve those problems and make it accessible to a lot of people. And I think that's amazing.
I want to ask you about Barry Silbert and Second Market. This may be a naive question, but the way I understood what they were doing is sort of acting as an investment bank and allowing people to buy and store Bitcoin with this new Second Market entity, and then charging a commission. And it was all collecting a fee. And it was always my understanding that Bitcoin was supposed to we were going to erase the fee. So how are they able to collect that with the new?
No, so Bitcoin? Let me explain. So and also full disclosure, I'm on the board of Second Market,
which is why I'm asking you the question.
So what Barry created was the equivalent of an ETF. And the reason why an ETF is important is if you look at what ETFs did in the traditional stock market, it unlocked access to equity to a broad class of retail investor. So 20 or 30 years ago, one would buy individual stocks. It was not a thing that millions and millions of people engaged in until the creation of an ETF, because what you were able to do was create a basket that tracked, for example, in the case of the S&P 500. And so you could buy one thing with one ticker symbol that you could check, that you could put into your IRA, that you could put into your 401k, and all of a sudden it would just move. And it abstracted out a lot of complexity. Similarly, in order for the understanding and then the ownership of Bitcoin to reach mass market adoption, we are going to need things like that abstract complexity. I agree with you. Who the hell is going to go beyond us zealots, go to an online wallet, buy some stuff in an online exchange, transfer it to a wallet, put some in cold storage, keep some in a hot wallet, do this, do that, do the other thing? It's ridiculous. It's unusable by people who don't care. And when things scale, they need to be used by people who don't care, not just by people who give a shit. Okay? So for all of us, we need to basically get to a place, and things like Barry's ETF do that, where by the end of this year, it's going to be exchange traded. Your parents now, or your mom, when she reads about Bitcoin and says, Brad, what should I do about this Bitcoin thing? You can say, well, you know what? Why don't you take a few $1,000s and buy this ETF? You can use E-Trade. You can buy it whenever you want. You can sell it whenever you want. And all Barry does is charge a fee on the way in and on the way out, which is not dissimilar to how every other mutual fund or ETF works.
But theoretically, should we no longer one day need an ETF when the Bitcoin ecosystem abstracts the complexity by itself?
No, you'll always have it. So for example, US dollars, you can go to the bank today, but why do money market funds exist? Again, they exist because it's a pooled vehicle that creates a leveraged buying power and it creates coherency in a market, right? And it allows multiple participants who have completely different needs to be able to transact in the same marketplace efficiently. So you may be buying it to buy, you may need Bitcoin to buy bread, but the German government may be using it to be hedging euros. We shouldn't care. The point is we need all these mechanisms in place, and one of the things it will be what he's created.